Time for business. I'm Joy during Bira. Managing runaway interest rates and taming inflation will be the top two priorities for the nominated CBK governor and his deputy should they be approved by Parliament. The nominees appeared before Parliament's Finance, Planning and Trade Committee today and said they would be seeking lasting solutions to the perennial problems that seem to have been a bridge too far to cross for previous governors. KTN's Adelaide Changole kicks off tonight's business.
It has become the norm for Kenyan banks to post market-breaking returns every year. According to the central bank, Kenyan banks posted a cumulative total of 141 billion shillings in pre-tax profit last year, driven by increased borrowing, commissions and earnings from foreign exchange trading.
Banks have been making a lot of profits. The return on equity is quite large. It's in the 20%, 28% actually.
But while banks have been raking in billions, the depositors of these funds have had to make do with a tiny fraction of those returns as banks capitalize the interest rate spread to reap maximum returns, a fact the nominated governor of the central bank says is worrisome.
The interest rate spreads are large, very large even by international standards.
High interest rates continue to bedevil the country, which has been seen as an impediment to accelerated economic growth.
The banks have total control of the funding in Kenya, and there is a tendency for them to exhibit what I would call dominant behavior.
And while these have remained an insurmountable challenge for subsequent governors, it is a key focus for the team that has been nominated to head Kenya's top monetary organ. To start with, the proposed deputy governor wants a bigger breadth and diversity of players to come into the market to offer different products and break the strangleholds banks have on the economy.
Make sure that the funds that are generated in Kenya are put into different buckets, and so nobody has complete control to dominate what is happening in the market.
To deal with perceived risk that is priced into loans, the proposed governor says he will be making management of inflation his #1 priority.
It is actually eating into the sort of, let's say, the approaches that commercial banks and other investors take, because they feel that they need to have very high returns because they are unsure where the inflation is going.
The two, alongside the proposed chairman of the CBK, Mohamed Nyaoga, was speaking before Parliament's Finance, Planning and Trade Committee. The committee will debate their findings and table their resolution for a vote on the floor of the House. Adelaide Changole, KTN Business.